You're a big believer in emerging markets. Your earnings have been very strong. Business has picked up. You're actively looking at the BRIC space. Many people believe it's only the I and the C that matter as far as your mini Lloyd's model is concerned.
No, I think markets in South America, Latin America, Middle East, as well as India, Southeast Asia and China are all important. Mm-hmm. So we take them all very seriously. So if you look at Lloyd's as a marketplace, if you look at the countries that we're really focused on, it's in Brazil, Mexico, Colombia, the Middle East and Dubai, Turkey and Eastern Europe, India, China, Singapore, which is our biggest platform outside London, and Southeast Asia generally.
So your big bet is emerging markets. There's also a reason that emerging markets are under-penetrated. The Indian government has moved on reforms as far as insurance sector FDI is concerned. This has of course happened via the FDI route, ordinance route, and they're still awaiting the Parliament's approval. Yes. I have a question to ask of you. Does this ordinance route inspire confidence for people like you to look at India with renewed interest, or would you rather wait for the Parliament to give its final nod?
We have been looking at India, as you may know, for a very long time.
That's right.
We are very keen that we should come onshore in India with the Lloyd's market. We've seen the ordinance, which is helpful, but we are waiting now for the Act, and we're very hopeful that that Act will be passed during the first half of 2015. And we will wait for that Act to be passed, but in the meantime we are discussing with the regulators, the IRDA, the detail of the regulations that will surround the introduction of international reinsurance into the Indian market. And we think that the introduction of that reinsurance will be of huge benefit to the Indian economy, because at the moment most of the major risk, catastrophe risk in India, is effectively self-insured within India, and we've seen in other parts of the world the benefit of risk mitigation, diversifying risk outside economies, both to the sustainability of the economy and its growth.
Will you be looking at a strategic partner as far as India is concerned? What are your specific plans for this market?
We are a market, so we don't ourselves, we do not envisage having a strategic partner. So if you look at the Insurance Amendment Bill, you'll see that there's a specific chapter for Lloyd's to allow the Lloyd's market into India, and that's what we will be doing.
As far as India is concerned, you've been on record to say it has promised a lot so far but delivered very little so far. What about India disappoints you? It's a great market out there waiting to be penetrated, but what is it about India that continues to disappoint you?
Very little. I think the Indian economy is you can see, is robust, it's strong. You have a business-friendly political leadership which seems to be seized of all the key economic issues. And we are very optimistic that this will happen. If you like, the slight frustration has been the time that it has taken to introduce this Insurance Amendment Bill, which has had the support not just of this government but the previous government, but it's been difficult to get it through Parliament, and we're hopeful that this will now happen.
How do you assess the Chinese market? Is it very difficult because of the regulations that it has, and how exactly does India compare vis-a-vis China in the insurance landscape?
They're two very different markets. The Chinese market obviously is potentially the biggest market in the world, and India is just behind. I would say that the Chinese government are very keen to internationalise their own domestic insurance industry, and also they're very keen for the carriers in China to internationalise themselves, and that again is a role that Lloyd's plays. So, for example, China Re has recently come onto the Lloyd's platform, and we very much hope, if we can get onshore access into India, that we will find Indian carriers internationalising themselves and using the Lloyd's platform. We're a market, we're there to facilitate international insurance.
The key challenge really is competition in growth markets. How exactly do you look at garnering market share, and do you believe this could be done at the cost of profitability?
Well, there's always a balance between growth and profitability, and no more so than in insurance. Growing the top line unwisely or imprudently is a recipe for trouble, as we've seen over many years in the insurance sector. So growth has to be done carefully, prudentially, and particularly in the space that we're in, with a real examination of data. So, for example, in China, we're now building up the databases so that we can look at the natural catastrophe incidents, probabilities, building up mathematical models, and that's important. And we would do the same thing with India.
Fair point indeed. If I may take the discussion forward and talk about the sectors that insurance sector, especially Lloyd's, will be looking at exploring all of 2015, which ones would those be?
When you say the sectors, the business lines, well, I think we see that as the world is developing, you've got higher geopolitical risk, you've got climate change where you can see changes in weather patterns,
That's right.
You can see cyber security and all the impact that that has, and in terms of as countries continue to commercialise and industrialise, they're creating more and more B2B risk. So all of those areas we see as very important that we continue to innovate in and we develop.
Aviation is a huge drain as far as the Malaysian Airlines disappearance is concerned on the books of Lloyd's, but is that a sector that insurance sector is beginning to get wary of, considering the spate of incidents that we have seen as far as aviation is concerned?
We've had a coincidence of aviation catastrophes with the Malaysian airliners in Libya and then with AirAsia. These are tragic accidents. In financial terms for Lloyd's overall, these may surprise you, are not hugely financially significant. They are significant in the aviation market, obviously. I think it's a reminder to the insurance market and the aviation world of the risks. And it means that I hope that aviation underwriters will continue or will price risk properly, because what we don't want is a situation where we get into a position where more and more capital comes into the market and actually just loses its funds.
Is it fair to assume here that the communal geopolitical tension of the kind that we've seen in France with Charlie Hebdo, or the kind that the world is seeing gather a lot of pace in Europe, is the biggest risk that insurance companies need to watch out against?
Well, I think that the geopolitical risk is creating, is likely to create a number of consequences. One is it's probably slightly reducing economic growth, which is, is an issue. Secondly, I think that with these kinds of situations, there tends to be a bit more of a retreat to nationalism and maybe protectionism.
That's
even.
right.
And I think that's very important for the global economy, that economically we keep the barriers down. Because if you have free trade, freedom of movement of capital flows, providing that's well regulated, is actually of huge benefit to the international economy, as we know.
Coming back to your own capital needs, in a world where the US is beginning to talk about rate hike, UK also talking about a rate hike, and the rest of the world obviously talking about very, very low rates, how are you going to manage your capital needs and tackle the risks?
Well, I think that if I speak for just to pick you up on the UK,
yes.
I think it's relatively unlikely that we're going to see significant rate hikes in the UK. I think the UK economy looks reasonably strong, but I think given the news of the last few weeks, I think that's unlikely. In terms of the capital, we hold capital at Lloyd's tends to be in very liquid, short-term instruments, because we're holding capital to pay claims. We're not like a life insurance company.
That's right.
So against that background, we suffer obviously from very low returns. But that's something that we've lived with now for several years. And against that background, there's no question that our underwriting discipline has improved, so that we're making, or up to date, we've made good underwriting profits. And part of the whole scene here is that we must maintain underwriting discipline.
Many people believe, and you rightly pointed out in your previous answer, that there has to be an integration of sorts as far as monetary, fiscal and political will is concerned. But we are looking at a region where the developed economy like Germany doesn't want to relent anymore.
No.
Greece is going through its own political trouble.
Correct.
Given the fractious polity of that region, will a monetary stimulus like this hold any ground?
Well, I think it may in the short term, but I come back to the point, exactly your point, that you've got these fractures, and unless there is a much greater economic unity, these fractures will continue. And I'll give you an example. There is talk of the individual national banks, national central banks, taking responsibility for the losses caused by QE
That's right.
in their own countries. Well, that is actually a fragmentation of the Eurozone. Now, I can't think that in the long term is a sensible thing to do if you're going to maintain a euro and unity of political, monetary and fiscal policy.
Let me just ask you the last question, and that of course has to be on the US. The world has seen a very undulated landscape as far as global recovery is concerned. The US is growing at a faster pace. Eurozone is in deep trouble. China is slowing down. Do you believe the US can go back, and is it dominant enough to go back to being the single engine of global growth that it once used to be?
I think that the demographic change in the world is such that it's very unlikely that the US will, in a sense, assert its position of the dominant economic force it was 10, 20 years ago, or maybe longer, 30 years ago. But I think that in the short term, you can see that the enterprise economy in the States, which is so virile and so vibrant, is really coming through. And you are seeing, in a much smaller way, the same thing in the United Kingdom, where I think that again, the enterprise economy is showing signs of good progress, which is leading to greater confidence, yes.
Thanks very much for speaking to us. We wish you all the very best for the rest of Davos. Thank you
very much.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.